All right, so first video in a while. Just want to break down what happened with the market today. First thing's already open. Amazon. You can see this trend line here, right? Uh, Basically broke above it. Yep, and you see as it broke above, it went straight up. Yep, and it came all the way back down, touched it, broke through, retested, stayed around here, and then broke back down. So we do have room down to this area down here for Amazon, 183.95, about 184. I haven't been looking at SPY a lot. You definitely should when you're trading because what the fuck is going on here? Because it gives you a indication of market direction, right? All right, so yeah, now we are in this recent supply zone again. So yeah, this is that's what that red thing was. It was a supply zone. I don't know why it was that big though. Anyway, so we could come down all the way to around this area, around the 540 area. So another $2.50, right? After pushing these highs, these are all 5 minutes. Another big one I know people are in is Google. Yeah, consolidating a little bit at the end of the day. Yeah, this is still good in this range. Again, look for the break of the 180.24, but then you also have this little bit of support here where it flagged up. If it breaks the high of 182.52, then you can see the upside. Let's see. I want to look at Meta today because Meta would have been a pretty good play on the break of that consolidation. Yeah, so it was here. It was here. So we had this come up, this gap up, and then went straight up. I think it was about up like what 2% this morning, 2%. You had this big wick here, and it pulled back. Right, it touched this line again where I drew the line, bounced up, pulled back down. As soon as you see it break, where these two reversed, right, it's most likely coming back down. It did fill the gap later in the day, right? You have to understand if it's coming down to a gap, it's most likely going to fill that gap because buyers didn't keep it up where it was, where they wanted it initially. So that was the first play. Second play, you did almost have a retest. It wasn't a perfect retest, but it was into this demand zone, and it came back and held under it, like literally right under it, as you can see here. And once it broke down past this little consolidation area, it was free falling from there. Anyway, let's see. Another one I wanted to play was AMD because AMD had a pretty beautiful setup today. Yep, look at this. And look at previous levels that I plotted. So, yeah. Here you can see you sort of have a double bottom here, right? But it was mostly here. This is a head and shoulders. So yeah, on AMD, we had this initial drop in the morning, and then we basically had a double bottom. Not perfect, not exact, but around that. Anyway, it was finding support down here. All you need to know is if it holds this, then there's a chance that it'll stay in that range or break upward, which is exactly what it did, right? And it kept bouncing in between these areas. Yeah, up, down, up, down, up, down. It's easier to see on the 10 minutes, but I don't pay for premium because fuck that. But yeah, so again, once we broke past this range of consolidation, yeah, it was likely to at least go up here and retest that 162.76, which as you can see, it got just above it, but basically the same. It got more like to these previous highs over here, which is 163.19. And yeah, again, previous levels that we charted, pretty much respected it. Came up, tried to break, didn't hold, came back down. You had a retest on this wick, but you still held under, and yeah, went down to the next level. But yeah, in here, you can't really see it on the 5 as much as you can the 10, but there's a head and shoulders in here. Slightly, you could see it here, right? Shoulder, up. Yeah, that's the head. Shoulder, boop, down. Yeah, so, once it broke again, just like Meta, under, this area of consolidation, again, pretty much where that previous line was. Yeah, it had room down to, again, that previous level, which it did go down to. And again, once it broke through, up, and this over here, I'm pretty sure was a head and shoulders as well on the 10 minute. So you can kind of see it here, right? Or at least the two shoulders and down, right? And again, it's that small little bit where it's trying to flag up or flag out and it breaks down past the bottom of these candles. That's your indication that it's going to go down most likely. Because again, these are strong moves up and down. And if buyers couldn't keep it up here, well, then it's seller's turn to bring it right back to where it was. It's almost like a fair value right there, fair value gap. Um, so, I think that's it for stocks I wanted to go over. First question I had was, as for time frames, what to use when. And actually, I've been thinking about this today before I was even going to make the video. Uh, Basically, swing trading, you're going to want to use 30 minutes hourly, daily, weekly, in my opinion. Day trading, you're going to want to use the 5, 10, 15, 30. And scalping, the 1 and the 5, right? Or even the 2 and the 3, whatever. Even the 30 seconds if, you have to. And again, 1 minute isn't for directional moves. It's for that scalps. It's the bounces off of VWAP and the bounces off EMAs, right? Stuff like that. And that's another thing I'm going to go over in a second because somebody else asked me about scalping. But day trading, 5 minutes. 5 minutes, again, this is 5 minutes. It gives you a good sense of direction, right? Like here, previously, we hit this top up here. Just like this point, we dropped. Yeah, just like this point, we dropped. And we pretty much stayed in the same exact range. Yeah, maybe slightly higher lows, except this one here. But today, higher lows. So again, tomorrow you could see AMD take a little pop up. Again, you have to break this level to continue, right? And again, this is supply. This is where sellers are selling. Yeah. So anyway, and then for swing trading, okay, all right, and then for swing trading, again, 30 minutes, 1 hour, 1 day, 1 week, and that's what I like to use. Again, you could use the 1 month. I'm going to break down why I don't use it and why, you could swing long term. I'll explain everything in a second. All right. First of all, let's go to the hour. Yeah. So like here, you can see that AMD has this range over here, right? And then it has this gap down here. The first step is obviously breaking past, this past day, right? All these wicks down here where it's been in demand, where it's been bought back up. Yeah. If it breaks down there, it needs to get here. If it breaks down here, you at least have to touch through the gap at the top of this candle, right? If it continues down, then you're most likely going to touch this support down here. We could see 1, 2, 3, 4 candles on the hourly held above. Yeah. And then again, just plot your ranges of where that supply is, of where stuff is getting bought up consistently, right? And then each level has to break. But yeah, for swing trading, so again, you're in this range with AMD. There's no saying which direction it'll go. Again, if it breaks upside, up this, you got top here, and then, you got up here over here. Even down here where this little support was. But yeah, again, plot your levels, your supplies, your demands. The stronger levels are obviously the most important ones. But yeah, I use the 1 hour, the weekly, the daily for swing trading, mostly trying to find the trend. And, another thing I want to talk about though with swing trading, there's a little bit of a recency bias in the market, which is why we use the 5 and the 15 and stuff like that for day trading. Because it's what the perceived price of a stock is that day. You know what I mean? Because it changes pretty much every day. But more importantly, with swing trading, you have to be careful with earnings and news and all this stuff because in a moment's notice, again, public traded companies have to report their earnings every 3 months, every quarter, right? They have to show, their revenue, their profits, their debts, real estate, everything. If from that 3 month period that changes drastically, it's more likely to change drastically in a year, right? You kind of have to forget those levels 3 months ago. Because, I'll give you an example, right? Zoom at the height of the pandemic. People were using it like crazy. Their earnings reports were going up, whatever, blah, blah, blah. Yeah. And then, as COVID started to fall off, each 3 month period, you started to see a little bit of a slowdown, right? Until, after COVID was basically gone and Zoom was only used for business meetings. Yeah, and that's pretty much it. You saw a slowdown of revenue, a slowdown of profit. You might have even seen more debt. I'm not exactly sure. And it used to be like what, a $300 stock. It's not that anymore. It's like $50 because that's the perceived price of it now. Back then, it used to be speculative and growing. But right now, I wouldn't buy Zoom for 300. So I mean, you can use that level later, but things will change if it ever gets to that point again. It won't be the same company. So again, recency bias. Use recent times as much as you can. But here's the other thing. That's just a company that's not doing well anymore. For companies that are normal, like like say AMD, Nvidia, whatever, they have. I mean, I guess not normal because they don't even have normal growth. They have you know vast growth, right? So I mean, if you look at like the 1 month and just zoom out, it's got this chart, right? I mean, you can kind of say this is normal growth, healthy growth, whatever. But this is what like most companies, the big guys, will look like because they have, they continue to grow their earnings or etc. This is a normal growth, right? And nothing will change really about their patterns, you know, and their charting and all that stuff because the business model stays the same. The amount that they're growing year over year stays the same. If something changed just a little bit, okay, but people are still, it's still in that price range that it's been trading at the previous day, right? Or the previous 3 months, um, with relative to normal growth. Yeah. Um, so again, you need to take in like earnings and stuff, and the year over year stuff, the quarter over quarter stuff, and you can't always rely on levels because of that. You know what I mean? So recency bias. Again, 3 months ago, blah 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 company reported their earnings were normal, right? So that in that 3 month period, everything stays normal. Yeah. But then this earnings, say they lose a little bit, right? Okay, well then it's maybe not as the same value that it was 3 months ago, or maybe they grow a little bit, right? So again, it's not the same value as it was a few months ago. It's going to go up. That's why it flies up during earnings. Yeah. Um, and you have to create a new chart basically and new levels around what people now think that it's worth, what buyers are buying at, and what sellers are selling at. Um, I mean, I wish I could think of a good example, but if you get what I mean, I think you get what I mean. So I'm not going to spend too much time on it. Let's go to the next thing. Um, Scalping. That's right. Okay, for scalping, again, you can go down to 1 second. It's crazy. I mean, I would recommend starting with 1 minute for new scalpers. Uh, Scalping is stuff like, like this, right? If you have one, two, bounce, this becomes a little bit of support, right? And you can see this bounced here, right? It's a scalp. And scalpers look for 20, 30, 40 cent moves. If it's a small thing, maybe 10% might give them 5%, zero DTE stuff, right? They just look for the small moves, the small bounces, in and out, super fast. I say scalping's, 1 to 5 minutes. Some people say it's just 1 minute. Some people say it's just 30 seconds, right? Um, but yeah, so like indicators for scalping obviously are going to be just the normal the VWAPs and stuff like that. See, look at this, right? It touches VWAP, you're scalping this back, back, forth every time it touches. Yeah. And unless it breaks that, then yeah. Again, you can use VWAP again for day trading. This is the 1 minute though, but still in the 5 minute, it came down here, again, touches this, boom. If it doesn't hold above, you can see it wicked above twice, didn't break above, coming down 5 minutes. But again, the 1 minute scalpers would play this multiple times, right? Comes up here, right? Scalp it down. Yep. Oh, then let's see, scalp it back up. Yep. Touches again, scalp it back down, et cetera, et cetera. Even here, right? And then EMAs. EMAs is another one. Again, support and resistance, VWAP, EMAs. This is the kind of stuff you use for scalping, right? Where's the 920, bro? There you go, whatever. So again, here, look, it's writing the EMA, the 9, right? So touches it, yep, comes back up. Touches it, comes back up. Touches it, comes back up. Touches it, comes back up. You know what I mean? Breaks down, that's when you can probably scalp as soon as it breaks. Yep. take it, and then maybe it'll retouch. But this is where you sell. Scalpers only hold for 1 minute, right? This is the 1 minute. They sold in the next candle. It's done, right? They got their profits. They're out. Again, touches, didn't break, right? It wicked off of it, didn't break. You can buy down. Yep, that's a scalp. Um, and again, here it's actually kind of perfect for directional moves. Uh, it was on top of the 9 here, and it just rode that up until it broke under. You could tell that's a slight, sign of reversal, right? Um, and yeah, it broke up again. No, but once you see the second break, yeah, and especially because it looks like the opposite of this side where it's just riding the wave up. Now it's just riding the wave down on the 9. I mean, that's how you can use EMAs for day trading essentially. But yes, scalping, you're basically just VWAP, EMAs, in and out, 1 to 5 minutes, and that's it. Again, you can look for supports, resistances, supply, demand, stuff like that. What was another thing somebody asked me? What I look for in the morning. Somebody asked me that question before. Again, we'll go back to AMD because, oh yeah, this is AMD. What the f am I talking about, bro? Okay, go back to 5 minutes. Anyway, I'll just say it. Basically, in the morning, what I look for is pre-market highs and lows, um, breaks of levels on the pre-market highs and lows, right? And patterns. When you see a pattern setting up in the pre-market right before opening bell, it's still a good sign that the pattern is going to go through and finish. Yeah. If it's sitting at demand or in the supply, it's still a good chance it's going to respect it. Not all the time. Again, the first 30 minutes is volatile. Anything can happen. I mean, we saw it in the video today, right? I was talking to somebody about it, and basically I said NVIDIA can go up. It did end up going up because it respected the pattern in the morning. But at the very end of the morning, it didn't respect the pattern. First 5 minutes, it regained that pattern and then went up, like $1.50, something like that. And then again, 5 minutes later, the pattern was gone again. It was right back down, breaking down. And again, it broke that pre-market low, right? I think it was, I forget if it was trying to hold. Anyway, yeah, whatever. The point is that first 30 minutes, super volatile. It can change in a moment's notice. But I look for patterns. I look for levels. I plot the highs, the lows. I watch the highs and the lows. You don't even need to chart them, right? They're pretty visible. Yeah, levels are pretty visible. But yeah, you know, what else? I mean, you look for news. Watch news. We have that news bot. I think it's still running. Check it out. See if you find anything. I mean, because news can be a huge indicator. It can be a huge catalyst for moves in and of itself. Blah, 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 blah. Anyway, what else do I look for pre-market? I mean, yeah, again, that's, it's really just plotting those levels. It's seeing where, checking out all the big 7 and all the names that you're comfortable with, which is another point, is get comfortable with, 5, 10, even 20 tickers. I don't recommend 20, but like 10. As many tickers as you want, honestly. And take a look at those every single morning. See where it's at. See where it's at on your levels that you previously charted. See if it's holding up above something, etc. Right? Yeah. So I mean, again, just looking at AMD here, just the last thing I'm going to say, quick glance, right? You can see this is a supply zone, right? Where wicks off, touches almost, right? Comes down here, immediately wicks off, green candle, yeah? Or sorry, demand zone. Yeah, and it does it multiple times, yeah? So we could have taken a look at it today. And again, I put this in my chat. I was so focused on other things that I missed every move on Amazon today. I mean, Head and Shoulders break, right, at this flag up here. Head and Shoulders break this flag up here. Double tops twice, pretty much. Double bottom almost down here, but still it held this, came down, held above it. And again, this is your indication it's probably going to go back up. Yeah, I just missed it again and again and again. But yeah, always take a look at your stuff pre-market. Take a look at your levels. See where it's at. I mean, you can even see that this demand zone is basically this recent supply zone. Yeah, I think that's it for today. Trade safe. Stay safe. Have a good night. Message me if you have any questions. Message me if you want to see any different videos. I'm pretty sure I'm forgetting like 10 of you who sent me questions and videos to make. Please let me know and remind me. I will do it. I promise. But yeah.